Ethereum stands at $2,900 and, like Bitcoin, draws a symmetrical triangle, so we must continue to keep a close eye on its updates over the coming months. In this weekly chart, we can see a structure similar to that of Bitcoin, a macro range in which the price has been trapped over the last few weeks between $2,300 and $3,200. When the price has gone on to test the lower part of the channel, it's led to a strong rejection movement. On January 24th, a hammer candlestick was drawn. In the week starting February 21st, a doji candlestick was created. Later, we saw a shooting star candlestick. And this last week, from March 14th to 20th, we've seen a green engulfing candlestick with quite a bullish connotation. However, we must keep an eye on this week's movement in order to see whether it tests the higher part of the macro range. When deploying the moving averages, we can see that the maintenance has been better than that of Bitcoin. The drop hasn't been too noticeable as the 20 and 50 period moving averages have not yet crossed each other. This means that Ethereum has not yet confirmed a downtrend in the weekly timeframe according to the moving averages. In this daily chart, we can see similarities between Ethereum and Bitcoin. As we saw with Bitcoin, Ethereum is found within a symmetrical triangle, a price compression. To continue seeing a bullish movement, it would have to break the $3,000 zone, that important resistance zone which confluences with 0.61 Fibonacci, a zone in which the price is found today. At this movement, we seem to be seeing a price pullback, which could go on to look for the important intermediary support zone at $2,750. Unlike the weekly chart, in this daily chart, we can see a downtrend based on the order of moving averages. If we take a look right now, the averages are in order of largest to smallest, 200, 100, 50 and 20, which confirms the downtrend in the daily time frame. On March 16th, the price crossed the 20 and 50 period moving averages, a zone which coincides with the intermediary resistance of $2,750. Later, we can see a reversal or a pullback, and once again is very close to the 50 period moving averages. If we wanted to see a continuous bullish movement, we would have to see green candlesticks closing above the structure in which the higher part of the symmetrical triangle, the $3,000 resistance, and the 0.61 Fibonacci converge. In this case, the price could go on to look for the next resistance, in other words, the 100 period moving average at around $3,100. On the other hand, if we start seeing candlesticks closing below the pink circle zone at around $2,750, the price could go on to test the 20 period moving average or even test the lower part of the symmetrical triangle. In the on-chain analysis, we can see that according to the DeFi Llama data, Ethereum is still the most used blockchain in the field of DeFi. Today, it holds around 55% of the total value locked, meaning the total value of the decentralized finance sector. In fact, it totals to $114 billion thanks to the recovery of 12% over the last 7 days. The Ethereum network will go on from a consensus protocol based on proof of work to a consensus protocol based on proof of stake. Just a few days ago, we reported the announcement around Kiln, the update which will enable proof of work and proof of stake to run simultaneously. The moment in which both protocols successfully work with Kiln will be when it will be added to the mainnet, in other words, the main network. This roadmap milestone is called the merge. In other news, as we saw on Nebulous, the burning of ethers continues. As of now, the burning's value is of $5 million. Since August 2021, which is when the EIP 1559 update was introduced, around 2.4 million ethers have been created, while 1.7 million ethers have been burned. The increase in the tokens being burned has led to the creation of the first deflationary block, number 12,965,263. It is based on the first block in which less tokens have been produced than those created. This generated such an impact that an NFT was created in its commemoration. Taxes of transactions carried out on the Ethereum network, in other words, gas fees, have collapsed over the last few weeks. As we saw on Nebulous, fees have dropped to levels seen in August 2021. This could be a result of the decrease in the number of operations carried out on the blockchain. And while it could seem expensive in comparison to its competitors, it could encourage transactions on Ethereum. Let's not forget that the gas fees have increased significantly due to the growth of the NFT industry, the metaverse, and DeFi, sectors which mainly use the Ethereum network. In short, Ethereum continues to advance its technology and remains a leader in the DeFi space. The price of its token, Ether, is stuck in a macro range like Bitcoin. We will have to pay attention to the global market to see what course the price of Ethereum takes.